Now, it's that time of the month again, and I'm not talking about your woman. I'm talking about the FOMC meeting, the interest rate decision. Where are we going tomorrow? Now, we have a few indicators that point us in a very interesting direction. We had some very interesting volume, some hidden orders come into the book today. But overall, we look at the past month, we look at some of the overall trends, the overall structures, and it leads you with a lot of questions. Now, I've seen a lot of people say we're at the same pattern that's led to some of the past breakdowns. Now, when we look at this chart, I want to take a broad look here first. We are range trading at local highs, basically, on the Nasdaq. Now, the last time we did something like this was all the way back in 2021, November through basically December. We have not sat in an area that long near local highs, dare I say, for this long. You could argue this past November and December were similar, but I would say they weren't. I would say they weren't because we've been making higher highs here as well. Now, leading into this, we have a few things to discuss because Powell has some very interesting topics he will be announcing today. Now, before we get into that content, we're going to look at a few sectors. And today, you're wondering, Tyler, what led to this downside? Was this shorts getting into their positions? I don't necessarily think so. I think we had a little bit of a reaction from what happened to FRC. Now, we knew FRC was going to get seized, and we knew that they were probably going to get bought out. I posted a video on Sunday on the secondary channel going over they would most likely be bought by a company that had already dumped money into them, i.e. Bank of America or JP Morgan. Those were my two guesses. JP Morgan is the one that ended up buying them. And it's going to benefit off of purchasing them as well over the next few years. They will make a lot of money on that. It's worth mentioning JP Morgan has more than 10% of all credit control in the United States. They shouldn't have been able to buy it, but they did. So we look at something like XLF here on the daily chart, and obviously, a lot of blood was shed, right? You look at the 2-hour chart, instant downside, you bounce up from there. Okay, a little bit of a bounce, nothing crazy, but you still get nonetheless. That's what happens. KRE, a little bit more downside. You find new 52-week lows on the day. You kind of get a little bit of a bounce. Okay. Now, when we dive a little bit deeper, I had a lot of questions today. PACW, is this the next bank, right? WAL, Western Alliance, is this the next bank? You know what was announced today on these companies? Specifically WAL. They confirmed a dividend would be happening still. Now, does this mean that they're out of the trenches and that, they're safe? No, that does not mean that. But I will say companies typically don't offer dividends if they aren't in a position to do so. Now, maybe this is a flex. Maybe this is a try to show a sign of strength. I don't know. But I personally, I didn't see any news today that warranted the drop that we saw from these regional banks. I do think credit restrictions will get tighter, like I've been saying, but I don't think there's a bank right now that's at risk like FRC and these other ones were. We also already had the earnings to verify the cash on hand, deposits rising, etc. But before we jump into any of the other content, I have to ask you to do two things. Consider liking and subscribing. Every single day I make these videos for you so you can be prepared on the market, fundamentals and technicals, giving you stocks I like and overall viewpoints, whether I'm right or wrong. Now, today, I'm going to tell you right now, I like to be as transparent as possible. I'm going to tell you what I traded. I honestly didn't really do much. I had a trade from yesterday and I just wasn't touching because I don't want to trade going into FOMC. But what was I doing? I'm going to tell you right now. I liked AMD earnings. And AMD, if you don't know, we'll go over the chart here in a second. They're down in the after hours. Okay, so I got into AMD around $5 to $5.30 on the options. So around $5.15 was my average, so you know. Those contracts ended up running to $5.80. I went into a pretty small position and I told everyone this, that I wasn't going heavy until after earnings. But I still wanted to have a little bit, like, get my feet wet. Those ended up running to 580, so almost 15%. But again, my plan, small position, and then if it runs, I have a little bit that's already running, and then I can establish my entire position post earnings, okay? Now, looking at that, it's in the down in the after hours. It's going to be a loss going tomorrow. I'll have a picture of my losses and everything like that. I just want to just share that. On the channel, we try to be transparent. We try to show our winners, try to show our losers. I did tell everyone, I was like, look, if you're in Discord, get out if you don't want the risk, right? Don't come complaining tomorrow because earnings have risk. Understand that. Also, too, the Instagram, this is where we post all of our short form content for now. Right now, we're about to hit 1,000 subscribers. We may do a giveaway. I'm not really sure, but you need to be on Instagram to get that invite. The link is down below. Check us out. We're about to hit 1,000 and mean a lot to us. Also, too, the Discord is open, so make sure you take advantage of those spots. These will close pretty soon. Again, this is not somewhere where you should expect to get signals. Yeah, we post what we're trading and everything that we're doing, but we're trying to get people to the viewpoint of learning to trade on their own. That's why even today, when I wasn't really taking that many trades, guess what? Guys in the Discord are trading all day long, right? They are understanding how to trade, what to look for in the live voice chat, everything in between, right? So it's to teach you how to do this on your own. Not to be following blindly and needing us every single day and holding our pocket. It's not the goal here, right? That's why we have over 800 people, almost 900. We're right there on the brink. We're so close. Now, let's get back into the video. So when we look at something, let's look at a few things. And I'm going to kind of do this video in reverse. I'm going to go over some of the big things and I'll go back into the indexes. You can skip to the end. I'll have it bookmarked in chapter, so you can skip it if you want. Let's look at VIX. I have a lot of questions here. Now, as we go into the Fed meeting, and I'm going to talk and give you my opinion there. As you go into the Fed meeting, you have VIX down here. It's at lows 17. You know, you did hit like 15, which is crazy. 15, like this is like your lows from 2021. That is crazy. So understand that. Okay. DXY, you don't look that good. I'm still going to tell you. I think DXY has room to continue going down. And if we stop raising rates or even mention the idea of a pause, I do believe DXY probably gets a little bit of pain. I'm going to tell you that right now. I do want to talk a little bit about yields also. And we look at yields, again, they're still coming down. They're still getting some pain, right? You could, we've been talking about this a lot, like the flagging, the action to the downside. This is something that you don't necessarily want to see if you're a bear. You would like to see these yields continue to gain traction to the upside. The 10 and 30-year inversion continues to track down. Also worth mentioning. Okay, I do think we're very close to a pause. I'm going to tell you that right now. So let's talk a little bit about what's happening with the Fed. Before we do that, I want to talk about Bill Ackman. This guy was crazy today. So Bill Ackman, if you don't know, he basically said at the last meeting, the Federal Reserve, you got to pause rates or it's going to be catastrophe. Okay, and I think it's a little bit hypocritical with what this guy's saying. So today he comes out and says, I want to reiterate the following. When the MMF rates hit 5% on Thursday, who is not going to take their deposits out of your local bank? Now, the reason this is hypocritical, because let's realize who has money in the bank right now, statistically speaking, in the United States. Now, I'm not going to say everyone that's following me doesn't have money in their bank. I'm not going to say that. But if we look at savings rates across America, we have these saving rates rising like 4.3, 4.4%. You know, Apple Card 4.155%. That's the old craze right now. Why are they doing this? Why are they doing this? They're encouraging you to sign up with these banks because credit rates are going to increase also. So like the Apple Card, for instance, in order to have access to the Apple savings account, you have to sign up and get their credit card first. Okay, you have to understand that. So just getting you in with that little reel. Now, so his statement is if we raise them to 5%, everyone's going to take all their money out of the banks. Look, this is the stupidest thing I've ever said or even seen, okay? Savings are at all-time lows. People are living paycheck to paycheck on $100,000 a year, which I get, like in New York, LA, maybe that's a lot, like not that much in comparison. But in majority of America, that you should not be living paycheck to paycheck. The point is we're spending and spending and spending. And this has been the ideology of America since basically 2016, whether you want to admit it or not, right? Trump, that was his idea to get the market going, and it worked. It was a good strategy. Until coronavirus. I'm sorry, but it was, and then it wasn't. So when you have a pandemic or you have a major issue where the market shuts down, spending like crazy isn't a good idea. But Bill Ackman, who's it going to affect the most? It's going to affect the rich. It's going to affect the wealthy. That's who it's affecting the most. Because whether you want to admit it or not, what these rates do, yeah, credit rates are going to start going up, but they haven't been going up. They haven't been going up that much in comparison to the past. They're slowly going to start going up now. But who they're affecting is the big individuals, the people that are taking loans, the people that are trying to invest. And I get it. That's what grows America. But to point the finger and say who's going to keep money in their bank, it's stupid. Dude, you're talking about like 5% of America. Not even. That's overshooting. Like it's not even 5% of America. So Bill Ackman, congratulations on buying Netflix at like $400 and selling it at $150. You're literally a goober. So yeah, Let's just stick with that. Next, I want to talk about SPY's volume, and I kind of want to like lead up into indexes and talking about that. We look at SPY, you had a really good volume day, 103 million. That's a great volume day. It's like basically your best volume since the end of March. Okay, decent volume. Now, what I will say is you had volume in both directions, whether you want to admit it or not. The most volume you had on the day was actually near lows. So if we go in and we look at something like SPY, giving you a visual, and ES and Dow had the most downside on the day. We'll talk about that too here in a second. But if we look here at the volume, majority and the biggest chunk, the biggest volume candle you had was right here at 10 o'clock, around 10 o'clock. Okay. You dipped a little bit down and then you start buyers, obviously step back in. Okay. From that viewpoint, you continue to make higher lows for the rest of the day. So I'm not saying that there wasn't a lot of selling. Volume was good. Like until 11 o'clock, you had like 48 million. That's really good volume to start the day. But buyers still stepped back in. You have to understand that. And as we look at something like Bookmap, and again, if you're not familiar, this is basically a heat map of the market, and you can get a visual of icebergs and things along those lines of understanding, what's happening with flow in the market, right? So when we zoom in here, my favorite tool on here is the icebergs. It's my favorite tool. It's my favorite way to view what big money is doing, right? Yeah, if you're looking at the market, you don't really care what Jimmy is doing on the bench with like, $1,000. Is he going to move the market $50,000? No, he's not going to. Now, when we look at icebergs, they give you a better visual of the big buyers and people that are establishing real positions. Now, a few days ago, before we had that really gnarly drop, we saw a lot of those downside orders come into the market. Now, again, over the past 3 weeks, we've seen some of these days with really big buying. We saw some yesterday as well. So when we look here, it's important to get a visual. 1,700 lots, 2,100 lots, and another 1,600-ish, right? And then you have the little smaller ones coming in. They're still big, but they're just not as big as the other ones, right? So 900 is still a lot of money, right? It's around like every 1,000 is around $200 million in order, if you do the math on lots of, S&P futures, okay? So if we look here, there was around $800 million bought near low. And then you started moving back to the upside once those orders were filled. Now, fast forward throughout the end of the day, a lot of stagnation as you push up. Those orders are already in. You get another big buy, coming in here around, 4,500. And then here again, you have your another very large order around 5,700. I'm sorry. Actually, I just messaged Jay and was telling him about this. And I'm like, man, this is actually the biggest one I've ever seen. 5,700 lots. That's an incredible amount of money. So people were really dumping money back into the market, positioning themselves going into, the end of today. Now, again, does this mean that you have to pump tomorrow? No. It just gives you a visual on where orders are being established in the market. Okay. You have to understand that. And you look at the market and you say, okay, well, we're moving in this direction, or we're moving down, we're trending sideways. But a lot of the time when you look at volume, it can paint a very vivid picture of what's actually happening here. So again, when we go back to, the S&P futures or ES, I'll actually do some SPY charting today as well. So you look at like the 4 hour here. We look at what happened. You hit 4,200 yesterday. This is what I said yesterday too. People were commenting like, Tyler, I thought you were so bullish. I'm like, dude, we hit the target, right? Again, if you're not on the newsletter link is down below. I recommend getting into it because every Sunday we release that, and it's kind of like the watch list for the entire week. But coming into 4,200, when you have a target as a buyer, right? So if I buy, let's say Apple, and my target is 180, I buy it at 168, and I'm like, I think we're gonna go to 180. Well, why do I target 180? Because I think that's where sellers are gonna step in. That's a big resistance. And so when we go into an area where sellers typically step in, or we go into an area that's a major key level or a supply level, right? What does that mean? That you expect someone to step in and push the price down. So you want to get out of your position. Okay. Now, granted today, again, that's why I'm very careful with what I say. I do think you had some aggressive selling happening. But this candle right here, you clearly saw buyers step back into the market. You saw that, no matter what you want to say about that. You came down almost till back to 4,100, which is, again, you're just trading in this range back and forth. And that's where you were. Now, what I will say is that you did hold below 41.38, which has been a little bit of a key level as well. If I bring this level down to show you, around 41.38 right here, you can see it's kind of like your midpoint, like your 41, your 13.1 on Nasdaq, right? So you can see you've mounted, and you broke below, mounted, trying to mount, and then you stuck below at the end of the day, right? Going into NQ, where you at here, you're above that level, you hit the 13.1, you bounced up. NQ's big level down here at 12.95. This is stuff we've been talking about. But this is why when I say this, we look at areas of the market that are getting hit and areas of the markets that are holding up strong. ES and Dow took a little bit of a tumble today. Okay. Tech has been resilient. If you look at tech, you dropped about 160 points to the downside on NQ. It's not that bad in comparison. Again, I encourage people before we start jumping ahead of ourselves, we have to zoom out and look at what's happened before. We're consolidating still at highs. I'm just saying, shoot the messenger. I know Tyler's really bullish. It is what it is. That's how you're moving here. Okay. If you can hold above 13.3 on a daily chart, that's when you have that breakout potential. That's when you expect Nasdaq to push to 13.7. Okay. You have to hold it on a daily chart. If you look here, you're not doing it. I've been saying the same thing for like 3 weeks. I don't really know what else to say. You look good. I like it, but you got to hold above in order to be very confident for the upside break. Now, going into the Fed meeting tomorrow. Okay. So the Fed meeting is tomorrow. I think it should be 2 p.m. Eastern. Now, looking at the Fed meeting, I'm going to tell you a few things. This is my opinion. I think 0.25, I've been saying this for weeks. It's going to happen. Okay. Now, when we look deeper, okay, I do believe we're going to be leaning towards getting a pause sooner than later. As we hint towards a pause, if there is a hint towards a pause, I think the narrative of the market is risk off for a short time at least. Okay, I don't care. Stella may go away. I don't really care. Have your cool rhymes. I get it. We can write poems about them later. But right now, that's my personal opinion. Now, again, what would you be looking for to go long, to look for a long thesis? You'd be wanting 1, to get above 13.3 and hold. 2, 4,200 on ES. That's another major level. And then also holding both, I think it's 13.4 on the Dow. I'm like almost like 99% positive. The Dow, 34,000, right? 34,000 here on the Dow, right? That's where you'd be looking. Okay. Those are your big areas you got to hold. Okay. So if we're looking at the market, but again, there's no reason, I keep saying it, there's no reason to get over aggressive until we start getting the information. Also too with banks. And I know this is going to be a big topic. People say, well, if they got to raise rates because inflation is not necessarily dropping. Now, this is my opinion. And again, I recommend people following on Twitter so you can get a better viewpoint of just my opinion and just getting information. I think Twitter's a great way because I can talk to you guys, and I enjoy having like educated conversations, believe it or not. So, and I'm always really careful because I know I sound sarcastic. So a few things, and people keep saying they think inflation is going to keep rising and this and that. And I agree. I do think inflation is potentially going to continue to spike if energy continues to rise. So everyone's saying that you have to raise rates. You have to continue raising them, right? This is my opinion. Either way, you won't see an immediate impact on inflation if they raise rates tomorrow or they pause or they talk about pausing. Because if we look at the reality, what's happened since we raised rates a year ago, since last January, yeah, it's kind of crazy. We've seen 1, unemployment continue to drop. We've seen 2, wage growth continue to rise. We're still growing. Wages are still rising, right? So in theory, raising rates will not cause an immediate reaction. The Fed has been very clear. They have no power over raising, people's wages. They have no power of getting unemployment down. It's just a reality of businesses able to do it, right? Now, raising rates does make cost of business usually higher, so it's important to understand that. Pausing now versus next month won't make a huge difference. You have to pause rates to see the actual impact from the rates. Also, it is all about unemployment and wage growth, which the Fed said they do not have control of. So either way, neither is really great, but pausing allows you to have more flexibility. Getting at 5% and then pausing or a little bit above and pausing gives you more flexibility if you need to continue raising down the line if inflation spikes without individuals pointing fingers, banks, and DIMs. The inflation does show signs of upside. Again, you have more room to raise without getting close to 6.57%. This being said, you don't want to get to the point to where you're raising rates out of control, right? and get to this point of saying, oh, well, you over tightened. Like in reality, you haven't over tightened yet. It's just it is what it is. You haven't, because we're talking about getting to 6-7%. But if you get on the verge of pausing, you let inflation start to either rise, slow down, see if it's actually having an impact before you over tighten, you have the room to actually make a decision going forward. So let's say you raise rates right now to 5.5% by the end of summer. Okay. And then, come, winter, you start seeing energy prices spike again somehow. Now, in reality, that would cause CPI and all core inflation to rise again. And then you would have to continue raising rates. But in reality, if right now you saw a little bit of spike in energy, but it came back down, if you pause rates, you let inflation stay where it's at, slowly drop, do whatever it's going to do. They actually said 3-4% could happen quickly, which I don't really necessarily believe. But if you let that take place, and then it does start to spike, you have more flexibility before you get back to those dangerous levels of 6.5% to where you're in an area of stagflation, and that becomes an overall issue. Now, the major concern is if inflation becomes entrenched. But I'm going to tell you right now, raising rates to an unbelievable level right now and overdoing it won't really fix anything in the short term, right? You have to get to a point where you can pause and see if it actually causes things to slow down, because it's not going to happen overnight. It's not going to happen instantly. It's going to take time. You have to understand that. And again, I know everyone thinks they're like a professor and that you study economics for a living on your phone, on Twitter and YouTube. But again, it's just, this is my opinion personally. So I'm not saying that they should pause, but I think they're going to pause after this meeting. This meeting, 0.25, I think they pause next meeting, or they hint at that tone. If they go with the tone of we need to continue to raise, we need to see more, then most likely they're not going to pause, and that would be kind of detrimental in the short term for the market, in my opinion. They also need to talk about core inflation and their overall prospects on that. Powell was kind of shallow in what he said about that last time, so I'm interested if he says more about it. On top of that, with banks are going to be a big subject. I think he's going to praise the resilience of banks. I think he's going to praise the FDIC. I think he's also going to say they're going to do whatever it takes to make sure banks don't go under. That's my opinion. You may not like it. It's my opinion. I think they're still going to be doing more tightening on the budget and the balance sheet. They're going to say that like they did in the last meeting. But that's my viewpoint overall. If you have questions, comment down below. I'd love to answer those. But that's what I'm looking at. And that's ultimately where I see us going tomorrow. I'll have a more detailed video coming out tomorrow. So check us out. Have a good one, traders.